ladies and gentlemen, and welcome to part 8 of the trading plan series. My name is Andy Jordan, and today is November 14. Today we are going to talk about strategies, about the setups, so about the very a typical part of our trading plan. When we talk about a trading plan, then I think this is exactly what most traders think of. So they most of the time they think about the trading strategy itself and the setup and all these things. So let's say it's a typical part of the trading plan. So what do we have to think about when we talk about the trading strategies and setups? Of course, first of all, we need a precise entry strategy. So think about what makes you actually entering the trade. More important, even if the entry strategy is where do you place your stop loss, where do you place your first stop after you have entered the trade. Also, will you use a time stop? Will you get out of the trade after 5 minutes, 2 hours, 3 days, whatever? Make up your mind. It is usually a good idea, especially when you trade breakout systems, that you say, okay, after a specific time of the trade, I will get out no matter what. What are your targets? Well, are you trading with targets? Maybe you're just trading with one target, maybe you're trading with several targets. So define your targets in a very precise way. What is your stop management whenever the trade's moving your way? That's most of the time the easy part. But also think about what is your stop management whenever the trade is moving against you. Are you going to use trailing stops? Well, maybe you are going for one target, maybe going for several targets, or maybe you use a trailing stop or any kind of combination. Will you convert your short-term position into longer-term position? For example, will you try to enter a trade on an hour chart and then convert it to a trade on the daily chart? And not last but not least, what needs to happen before you stop trading your strategy? Let's say you're a day trader and you had already 2 or 3 losses. Will this stop you from trading, from putting on more trades? So think about it. It can also be a definition in terms of losses and so on. So be very precise when describing this part of the trading plan, because only when you have a detailed plan, when you describe it very precisely, you will be able to track your results and then make adjustments. When you are not very precisely and you leave up a lot of these things to discretion, then you might run into the problem that you will not be precisely be able to really find out where the problems are, if there are any problems. So be very precisely with that. That's it for today. Thank you very much, and looking forward to talk to you next week. Bye bye, everyone.